All right, guys, April recap for the stock market. The NASDAQ was pretty much even for the month. The S&P was up about 1.5%. But the big winner in April was Bitcoin, ending up about 5%. So what does that mean?
It's back.
I was wrong on Bitcoin. Bitcoin is back. Bitcoin is the future. Sell everything you have, put it 100% into Bitcoin, and you will be rich. Insert sarcasm here. Lawyers, I am just kidding. This is completely a joke. If you believe in Bitcoin, you are still stupid. So let's go on with the new GDP numbers came out in April for the first quarter of the year.
Yeah.
Came out to 26,470 billion. What was that growth rate? Because the previous quarter was 26,150.
1.1%.
1.1% for the previous.
And then in the fourth quarter, GDP increase was 2.6%. So it's down.
It's
We
down.
had a 1.1% increase
Got
this
it.
quarter.
But GDP overall is up. Why?
Correct.
That's the friend of inflation. Inflation will drive up GDP, which will naturally drive up other things. So if you're new to this channel, I really want you to focus here, subscribe, share this with friends. And the reason being is we look at every investment from a long-term perspective. It's funny to us. Mo and I, we joke every single day when we see news flashes of what's good, what's hot, what's not. We just sit there and say, okay. What I care about is when can I buy a company or an investment for less than the intrinsic value? How do we determine intrinsic value? We use certain metrics. We use our software behind me. But the bottom line is, for the stock market in general, I have created my own stock market to GDP ratio, which is behind you. Now, for those of you, have you guys heard of a guy named Warren Buffett? Mo, have you ever heard of him?
I think so.
Yes, he's Charlie Munger's best friend.
Oh, that guy.
That guy.
Yeah. Got it.
Warren Buffett says that the stock market to GDP ratio at any given time is the most reliable metric on where we stand in terms of valuation. I did my own version based on the S&P going back to 1929. Now, the S&P started, I think, in 1957, but we have the equivalents going back to 1929 off of Shiller's website at Yale. So, going back in history, I've now updated for March 31st, 26,470 billion. And yet on Friday's closing price of 41.6948, we're currently 69.2% overvalued, but a nice little jump in fair value to 24.6487. As GDP goes up, it will drive up the fair value of the S&P. Think about it. If GDP doubled tomorrow, that's the income the entire country generates in the year. The companies in that country would also probably double. That's what would drive up the values, okay? So we use this metric. Now, we were as high as 103.4 just back in 2021. So we're substantially below those numbers. What's driven that? Well, for one thing, a drop about 10% in value of the S&P, but more importantly, an increase of about, $3 trillion on about 12 or 13% on GDP. That's really driven the fundamental value, but we're still 69.2% overvalued.
Yeah, inflationary environment does that.
Yeah, and by the way, that's the reason I'm bringing this up is everybody talks about the negatives of inflation, and nothing in this world is good or bad in and of itself. Inflation has positives for other. I was just listening to that, Dalton, one of our subscribers to our software, who's also become very close with Mo and I. He sent the Howard Marks podcast, right?
Yeah.
And in it, the head of Brookfield Asset Management was talking, and he said, inflation increases cash flow. And it does. Inflation increases earnings. Inflation, as long as you can pass the cost on to consumers, which is what basically drives inflation, your profit and your cash flow will go higher. All right? So that's what makes the values of these companies higher and higher. Inflation helps real estate. It helps it helps companies generate more cash. Now, where does it affect stock prices? Well, how do you fight inflation?
Raise interest rates.
Raise interest rates. And there's rumors out there that May will be a 0.25% increase.
Yep.
Mo, do you think that's going to be the last of it?
No.
You don't?
No.
They're saying that it will be the last of it.
I think that if they might pause for a while, but if inflation continues to rise, which I think it will.
See, I don't.
Oh, I do think it will.
Because look at it this way. By the way, I want everybody to remember, the things we're about ready to say, we're not making any investment decisions based on them.
No, I don't care.
And anyone who claims to be smart based on that is absolutely also dumb. We had an associate last year. I won't get into who it is, but he said that the raising of rates will stop in the early first quarter of this year, and the market would rebound and be fine. And I remember hearing that going, yeah, you're dumb. And sure enough, it didn't happen. And if it did happen, it would have lucky guess.
Yeah.
Here's my guess of what's going to happen. I do think we're going to have a recession. Mm-hmm. When is it going to start? Are we already? I don't know. But when the recession happens, how are they going to spur the economy?
Lower interest rates.
Yeah, that to me is more like, I mean, they've raised rates so fast.
It's been very fast.
So fast.
I think it's been 9 or raises in 13 months or something.
Is that what it is?
Some stat like that. It's very fast.
But I mean, look at the interest. Look at the money you can get on a 10-year treasury now. 5%. Yeah, no, sorry, not 10-year. 90-day treasury.
90-day treasury. 90-day and 6 month. Yeah.
And remember, that doesn't mean every 90 days you get 5%. It means if you hold it for a year, if you keep rolling it over, you'll make about 5%.
Yeah.
And that's pretty good money for cash sitting around.
It sure is. For basically no risk.
So how does that affect stock prices? Well, if I can get 5% by putting my money in an account,
people are going to be leaving equities.
I'd be like, well, wait a second. Why should I go
into a volatile place where there's a lot of unknown when I can just safely go here for 5% for a short amount of time?
Especially when from March 31st, 2021 to today, we're even.
Yeah.
At some point, that's 2 years, guys. At some point, people are going to say, wait a second. I can get 5% in my cash. Why the heck am I sitting here with even money, even if I get a dividend of 1.5%? That's how interest rates affect stock prices. And when you're discounting a cash flow from a business, the higher the interest rates are, the less money. You're discounting it at a much higher rate. It makes today's value much greater. Here's an example. If I was going to pay you $1 1 year from now, and interest rates are 1%, I discount that, it's essentially $99 today. Essentially, let's call it that. If it was 10%, it's essentially $90 today. So as interest rates go up, the present value of that dollar is much, much lower. And every investment is the present value of all future cash flows. So in April, we saw a month in which crypto was up, markets were basically flat, S&P was up actually a good amount, 1.5%. But I sit there and say, why are you laughing?
Because we hear 1.5%, you said a good amount, and people probably look at that going, 1.5%, that's a good amount?
That's 18% a year.
Yeah, but people look at that saying, wait, it's not a 15%?
Listen, we talked yesterday in a group chat about Tesla. We talked about, the cycles that occur.
Yeah.
You look at Tesla, hit a peak of 414, and now it's 160 or 170 as of today. You look at a company like that, and the thing we were always saying is, yes, they're unstoppable now, but eventually there'll be something that, and what's that stopping right now? Elon Musk's reputation. Yeah. That's one. Yeah. 2, 5 price reductions this year.
In 1 year, and it's only May 1st.
No, not in 1 year, in 4 months, Mo.
Yeah, it's only May 1st.
Yeah. So again, you have to remember, that's why we want to teach you to look at the long term of a company. Even a company like Tesla, they're going to have highs, they're going to have lows. Go look at the last 20 years of every company out there that's been around for 20 years. They had great growth periods and they had slower growth periods. They had declines in revenue, they had increases in revenue, declines of profit, increase in profit.
Yeah, go look at Amazon.
Go look at Amazon, go look at Apple, go look at Microsoft. Yeah. All those, go look at Google. Yes, Google, I think, had the first year ever, or whatever it was, of a declining profit for year over year. Maybe not even that, but the whole point of Microsoft might have had that. But you got to look at this. Do you think Microsoft 20 years from now will make more or less money than today? The hard part for investors is the emotional part. And that's why we do webinars every so often. So this Thursday, 6 p.m. Eastern time, we are going to be doing a webinar, which will teach you how to do options, okay? And the reason options are so great, it allows you to make money in any market up or down. Mo and I have done options for the last 3 years. We love it. I've never had a down month. I thought I did in January, but it did not end up happening. I made money in January. Now, I'm also very conservative. I'm not aggressive like these other options. So if you want to learn how to make money in any market, up or down, with options, sign up for our free webinar below. It's absolutely free. Sign up. You're going to love it. So back to April's numbers. So Mo, from a standpoint of other economic news, was there anything material there?
I mean, consumer spending was up 4.2%, with GDP being up 1.1%. So that was looked at as a positive by people. People are still spending.
But my comment is, it's 4.2%, 4.4%. But inflation was up.
Yeah, expectation was 3.7%.
Oh, wow. Wow. So even factoring the inflation, I'm not saying inflation was up, but when you have, let's say costs go up 10%, if everybody's spending went up 10%, I'd be like, well, yeah, because the cost went up 10%.
Right.
You're going to have an increase in consumer spending naturally.
And then, of course, the bank stuff. First Republic
just this morning.
Yeah. JP Morgan, what, took them over or something?
Yeah.
Okay.
You know, it's funny. I read a quote the other day about Warren Buffett. He said, every time I get a call on a Sunday, I'm making money. Because he's like, the only time somebody calls me on a Sunday for a deal is when they absolutely need the deal to happen.
Yeah.
It's desperation.
I wonder if he got one yesterday.
Well, yeah, I don't think he would have, because First Republic, but look at a company like First Republic. Look at a bank like First Republic. Let's pull up the stock. And this is why we always encourage people. We don't understand banks. That's why we don't invest in banks, right? And you might sit there and say, oh, come on. But look at this. Look at this company. All-time high, 222 on November 17th, 2021. That's a year and a half ago, guys. It was $222. This morning, $3.51 before it was taken over by JP Morgan.
Just 7 days ago, 423, I guess 8 days ago, it was $16.
Just in August last year, it was 171.
It's amazing.
Not even a year ago. Not even a year ago. It was 170. And I'm not saying we did not call this. To us, it's just ridiculous to try to. However, if you understand, we have a bank analyst that we know, and he was telling us about Silicon Valley Bank. He's like, listen, I didn't see it failing, but I saw enough things that made me go, I don't want to own this company. And that's all you need. You need to be able to avoid the bad ones, right? You're going to have bad ones still. But if people just look at this, based on charts, and if you only believed in price, it looked like a great deal right here, relative to history, relative to its all-time high, but you have to understand what you're buying. If you understand what you're buying, then you'll be able to buy more when the stock goes down. Because you have to remember, every day is an auction. Mr. Market's going to tell you what they think the price of the company is that day. And it's your decision to be a buyer, seller, or hold, right?
Yep.
You know, we talk about Meta. Meta was a big conversation in April. Why?
Because the price was up.
A ton.
That's it.
And in November, it was $88.
Yeah. Outside of the price being up, Meta's not in the discussion in the mainstream. That's my opinion.
Yeah, because the numbers weren't incredible. It wasn't like I was just like, holy cow.
Right.
I was just like, okay, they did well. They did well.
Yeah.
But once the momentum, remember, the news follows the stock price, not the other way around. The news follows the stock price. Let's pull up Meta and see how it did in the last 1 month in our software. 11.5% in April. 11.5%. Year to date, 90%. Yeah. But look at this. 1 year, only 12.5%. So it was basically even entering into April for the 1 year mark. Okay? Now, again, this is what we try to reiterate. If you understood cash flows, if you understand these things, you will be able to make a better determination. But more importantly, you have to be able to say, I'm okay with the stock going down because I believe the fundamentals. Yep. So if you like this, subscribe to the channel. Make sure you come to our webinar on Thursday. We're going to talk about more than options, but options will be our main focus and how to make extra income on your assets in your brokerage account long-term. And even if you don't have enough shares for that, learn it now, because when you're ready in the future to do that, you're going to wish you'd known it all the way along. Thank you very much for your time, guys.